Today, we're starting to see some big misses out here in the stock market. Lockheed Martin down 10.8%. General Motors down 8%. What do these two stocks have in common? Now, let's go over and take a look at how the indices fared across the board today. The Dow was up 179 points. The Nasdaq was down 81 points. S&P 500 up 4 points, with the Russell 2000 being up 1.82. We look at advancing issues versus declining. We had 66.9% of issues advancing on the day. Then as we come over and look at the sectors across the board, only two sectors were in the red: technology and communication services. Now, that was a big deal out here today because one of the things that we picked up on early today on the live stream was if you come over and look at a chart, and we're going to do this on an intraday basis. We look at the S&P 500, the SPY, for instance. Look at this chart of the SPY. Today, the SPY was up 0.01%. On the live stream this morning, we're talking about this in pre-market. You come over and look at the equal weight S&P 500, and we can see it was actually up 1.27%. So that's right around 1.25% difference between the equal weight S&P 500 and the normal S&P index. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. So what does this mean out here for the market? Well, one, as we saw right over here with the graph, technology stocks were in the red. And if we come over real quick and we take a look at Nvidia, Nvidia was hit hard early on. Nvidia actually closed down 2.55% after having a big move on the way down. Now, if you come over and we look at Nvidia on the monthly chart, this is very dangerous in my personal opinion. We can see Nvidia has been making new highs, but look at the MACD indicator. Is it confirming the new highs? Meaning, is the MACD indicator also making new highs? This simple answer is no. Why is that? Well, that lets us know that the momentum is not nearly as strong now as it was on this move right up here, aka it's very susceptible for a pullback in the very near future. Now, if we look at where that pullback would come into play, we can look right up here, candle wicks down here to the candle body. We talk about these structure breakout points all the time. Prior all-time high, we broke out. Now we have within this month came back and tested it. The more times we come into this zone, the more likely that zone will eventually give way, and we'll see prices actually start to come a little bit lower. Now, if we come over real quick, and we look at Lockheed Martin this morning. Lockheed Martin was absolutely down. We look at this on the monthly chart, and you see we've already had the push down, a little consolidation, and now it's trying to break down even lower. Now, if we zoom this chart out, we can see we're breaking below these lows. So why was that? Well, if you look right over here, we can see Lockheed Martin had earnings. There was a surprise of 10.54% to the downside. You can see this article right here. Lockheed Martin stocks rocked by big profit miss. So essentially, Lockheed Martin discloses 1.6 billion in losses on its legacy defense business. And that's what rocked Lockheed Martin out here. If we come over and look at General Motors today, you see a big nasty candle all the way down, big gapping down from this recent swing high that we've had. And General Motors was down 8%. Well, if we come down here, General Motors also had earnings out today. And if we look, General Motors actually had a positive surprise of 8.27%. And this is the exact reason why I always tell you guys, even when we have economic news, earnings, whatever the case may be, look at what the number is. And then more importantly, how does the market react to said number? Now, if we come over and look at the news article real quick, GM slides 7% after beating Q2 earnings despite 1 billion tariff hit, but they warn of steeper impacts ahead. Now, the market is always forecasting ahead of time, and that's why these stocks are kind of taking a beating out here. Now, something we also saw today, let's not forget, Jerome Powell still in the mix. Jerome Powell must quit to save the Fed, one prominent economist says. Now, let me know in the comment section down below, do you guys believe Jay Powell should be fired, or do you think he should potentially resign? Or do you guys think Jay Powell should go ahead and ride the remainder of his term out? Now, if we look at the fear and greed index today, you can see we've come off here just a little bit. We are still well into greed territory now. So today, not back over in extreme greed, but still well into greed territory. So to think that the markets can pull back here a bit does make quite a bit of sense. Amazing deals out there. Apex Trader Funding, 80% off all evaluation accounts. My Funded Futures, 50% off first-time users. Traderify, 35% off all accounts. Use promo code Mike. If you guys want to trade with a prop firm with the best payout policy out there, Take Profit Trader, right now, 40% off all the evaluation accounts. Best yet, no activation fee. Take advantage of these offers. Use the link in the description box down below. But we look at the SPY real quick. We've been talking about this time and time again. One, we have a 38% retracement down below us at 616.36. If the market's going to continue up, if we retrace down to a 38% retracement, that would be a minor retracement and what could still be a very bullish move in this market. Then we come over and we look, we did make it down towards this consolidation zone today. We rejected right back out with a hammer candle. So now we have a shooting star candle. We have a hammer candle, aka a hangman candle, since it's in the context of an uptrend. Are we about to see confirmation out here tomorrow? Now, if we do start coming down, watch out for this high volume node. Now, what's going to be the catalyst out here for tomorrow? Well, I'm glad you asked, because right now we're in the midst of earnings season. Tomorrow after the bell, we get Tesla, we get Alphabet, we get ServiceNow, IBM, Chipotle, just to name a few. And this could be enough to really start to shake things up. Now, if these companies do come out with big beats out there, all bets are off. Maybe we'll go ahead and see more new all-time highs in the market. Then if we come over and look at the economic counter today, the Richmond Manufacturing Index came out -20. Horrible reading out there. We look at the economic counter for tomorrow. All we really have on deck is going to be existing home sales at 10 a.m., followed by crude oil inventory numbers. Other than that, not a lot of news to really contend with. So jumping back over and taking a look at the SPY real quick, let's jump over and look at the 4-hour chart. MACD indicator is still trying to make its way down towards the zero line. And if we come back into this consolidation zone again, I do think it's going to break, and we're likely going to come down towards this high volume node at about 624.33. Next, we jump over and take a look at the 30-minute chart, and now the MACD indicator is flattened down by the zero line. Now, this is going to be critical, because if you're looking to short, that could be just pausing before we get ready to move down. But also, this could be pausing to get ready for another move back up higher. So it's going to be critical. Tomorrow, if we're trading below value or low, I want to look for the retest of today's low. Then anything below that, I want to refer back over here to the daily chart and really start to focus on this high volume node on the composite profile. Now, speaking of things moving today, look at the dollar index. Dollar index have another very weak showing out here. We look at the volatility index today. The VIX was down 15 cents on the session, but then we come over and take a look at gold. Yesterday, gold was able to smash through our ABC target, and then today starts to accelerate up once again. Now, gold looks like it's about to make a run to new all-time highs. Now, does it pull back before making a run to all-time highs? Well, we're going to have to wait and see, but I do think all-time highs is right in gold's sight, and it's probably going to go ahead and try to push over the finish line. Now, we come over and look at the futures markets real quick. We look at the S&P on the 4-hour chart. Here's a zone that we drew out this morning on the live stream, basically playing off kind of a minus development area off the prior week's profile. We came right into that level, bink, rejected right back out. And this is something we talk about all the time on the live stream. And even in these videos, I talk about this as well. The first time we come into a minus development area, expect the market to either bounce out or consolidate around that area. Now, there are times where we'll slice right through it, but a majority of the time, we're either going to consolidate there or get a bounce out. If we come down here another time or even a time after that, then expect that level to break. Then we're probably going to come down towards value or low. Then we can start picking off some of these high volume nodes off of the composite profile. Now, as we come over and start to look at the daily profiles on the 30-minute chart, notice today we were able to recover very well, and I was very upset. I did not trade well on the live stream. One of the trades I was hoping for this morning is when we started having these wicks down here, I wanted to see one more push below the low, and then as we started to come back up, I wanted to buy it. I never got that, and I continued to try to short, even though I kept telling traders, I think they're going to try to get the S&P up in the green, and look, we made it all the way back up and was able to actually overthrow last night's high. Now, as we look at this, value area high is going to really come in somewhere in the ballpark of 63.49 and a quarter. We're going to have the point of control about 63.36 and a quarter, with value area low being about 63.30.75. Now, one thing to note, if we look above us, we do have an untested point of control up here, 63.68 and a half. Then if we zoom this out a little bit, then you can also see that we have an untested point of control below us at 62.83. Now, right now we are closer to the upper point of control. However, I want to do a little Fibonacci extension real quick. If we go ahead and we incorporate the entire all-time high down to the low today, back up to the high, you can see 100% level would only bring us to about 62.97. And that's assuming that this retracement up has concluded right here at the high this afternoon. If we go higher, we'd simply have to drag the Fibonacci extension tool up until we finally start to get that turn in the market. Now, one thing to note, if we grab our Fibonacci retracement tool, measure swing low, down here to the swing high, we talk about this all the time. We've already come up towards the 61.8. We breached that. We're going towards the 786. And if we start breaking the 786, guess what? We're probably going to go all the way back up towards all-time highs, which means at that point, that untested point of control would then become a very high probability target. Now, as we come over and look at the QQQs real quick, Qs very weak out here today, but even with the weakness out here in technology, we can see that the Qs had a wick on the bottom of the candle, and then we close roughly in the middle of the range. Are we about to jump off and continue to make another new all-time high this week? If we do, we'll have to grab the Fibonacci retracement tool and simply move it up until we finally get that turn in the market. Now, at some point, once the turn gets underway, that's when we really want to start heavily focusing on the 38% retracement, as it'll be a very minor retracement. It could still be another very bullish move in this market. You can see right now the 38% retracement comes in about 549.85. Now, as we come over and look at the MACD indicator on the 4-hour chart, you can see we're trying to still make our way down towards the zero line, and we're really hovering right near this high volume area. If we can come back down below this area again, I think it's going to open the door towards this next high volume area, about 556. And then below that, I really want to start turning my attention from that point on to see if we can get a retracement back down towards the 38% retracement. Now, on the 30-minute chart, MACD indicator is below the zero line, but I want to caution you guys. We can see the MACD indicator at this point is simply going sideways. This could be the calm before the storm. Now, is it the calm to go up or to go down? Only time will tell. If we start clearing above the highs from this afternoon, then I would expect the market to come all the way back up and try to undo that massive first 30-minute candle that we saw today. If we simply turn right back down from here, then I expect the lows from tomorrow to come back and get tested. So one way we can go about this is, if we're trading below value area high, I want to lean more towards the market coming back, retesting the lows from today. If we break below value area low tomorrow and we start coming back up, then we can target the high volume node here, point of control, the high from today, and then push a runner right up here towards the top of that 30-minute candle that we saw in the markets this morning. Now, when we come over and look at the 4-hour chart real quick on the Nasdaq futures, you can see basically just sell, 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 sell. Boom, we get one little candle blip. And then now that last 4-hour candle is forming a candle of indecision. So as I'm looking at this, looking at the profile that's developing so far is just indicative of a trend style profile. And in this case, the trend tends to be to the downside. And if you look, we've already been above value area high. We came down, we hit the point of control, that target's out. Now these other high volume node targets have also been hit. So the next target playing off last week's profile would then be value area low. Anything below that, then we're really looking down towards the lows of last week. Now, as we come over and look at the daily profiles on the 30-minute chart, we're kind of in a tough spot. You can see we have untested point of control above us, 23,394.75, and we have an untested point of control below us, 22,985. And the question is, which of these levels are going to get tested first? Here's how I want to play this. If we break value area low, 23,154.75, I want to look for the market to kind of retest near the lows, maybe front run that here just a bit. We breach that, then I want to see if I can hold all the way down here towards that untested point of control. If we break value area high, then I want to target this structural breakdown point that we just barely missed today, somewhere in the ballpark of about 23,265. Then from that point on, see if I can hold out and make a run towards that untested point of control. Now, tomorrow morning, we'll talk about the overnight volume profile levels on the live stream. And if you guys want to learn how to trade the different volume profile shapes, then you want to make sure to check out this next video right here.